If you're moving to Florida or thinking about moving to Florida this next year, this may be the most valuable video you're gonna watch. We're gonna talk about mortgages and what happens to the hundreds of thousands of people who didn't pay their loans due to COVID and went into forbearance. We're also gonna talk about homeowners insurance and why it's more difficult today than it was in the crash of 2008 to get homeowners insurance. Stay tuned. Well, hey everyone, welcome back to my channel. My name is Matt Light and I'm a licensed realtor here in Sarasota, Florida. If this is your first time joining us here on YouTube or listening to the podcast, I want to encourage you to like this video and please subscribe to my channel. I make weekly videos on relocating to Sarasota and all things Sarasota real estate. So if you are at all thinking about moving to Florida this year, this video is going to be extremely helpful for you. I'm going to have two special guests on the show today that are going to talk about homeowners insurance and all the changes that have occurred with homeowners insurance in the last 6 to 9 months and what the outlook is probably going to be for 2021. I'm also going to have a local mortgage lender join the show today. She's going to talk about what's going on with home loans and what we can expect in 2021. But I want to start today by talking a little bit about what happened to the real estate market as a whole in 2020. Well, we started the year off extremely strong and then COVID hit. And no one really knew what was going to happen in terms of buying and selling homes. In fact, in April here in Florida, we had a statewide lockdown and the market kind of became really stagnant. And then as that lockdown ended and restrictions began to lift here in Florida, our phones began ringing off the hook. And I was having dozens of people call me who lived in states with high property taxes. And a lot of these people were still sitting at home, still under lockdown. And they began thinking, you know, I'm working remotely, I'm paying a ton of money in taxes, and I still have to deal with snow. So what happened to us in the Sarasota market? Well, we had a lot of people take their properties off the market due to not wanting people in their homes with COVID, but the demand to move here, it really skyrocketed and inventory became super scarce. In fact, in the third quarter, inventory became so low that if no new properties were to come on the market, we would have sold every property in a span of only 9 weeks. And so new construction, how did they respond to it? Well, they did not impose a ton of price increases. Rather, they just sold double what they were expecting. So this contributed to a national lumber shortage across the country. Quick side note, you can see that video linked below on how a national lumber shortage affected property values, especially the resale property value. But overall, we had an extremely strong real estate market in Sarasota for the year of 2020. All right, today I have the one and only Nino Gancitano joining the show to kind of talk about all things insurance. I'm going to ask him a couple questions in regards to what we can expect for 2021. So Nino, welcome to the show. Tell us who you work for and a little bit about how long you've been in the industry.
Absolutely. So I'm an Allstate agent here locally in Sarasota. Corporation is AMG Insurance and Financial Services. And I've been in the community with Allstate for almost 18 years now. So started straight out of college, and this is all I've done since graduating. So yeah, we're going to give you a little bit of info today. Hopefully that'll help consumers when they head down here. As far as the insurance goes.
Fantastic. Well, I've got a couple of questions here on my iPad that I'm gonna kind of just roll right through. Most of my listeners probably don't know this, but the insurance world was rocked pretty hard in 2020 with restrictions and kind of being a lot more challenging to obtain homeowners insurance. Can you tell us a little bit about that and what was it in 2020 that we saw that made homeowners insurance so hard to obtain?
Yeah, it's been an interesting year, and we can look in history in Florida as far as some of these ebbs and flows as far as insurance goes. We're kind of in one of those situations now. The last one was probably 2006, and then prior to that was probably 93, right after Hurricane Andrew. So a multitude of things that I don't want to bore clients with at this point, but there's a few things that have changed in Florida that have kind of all escalated at once to create kind of the perfect storm. So you've got reinsurance costs. That's the insurance that the insurance companies buy to protect them. That coverage went up approximately 30% this year, which ultimately is going to be passed on to the consumer in the form of rates. Obviously, if anyone's watching the news up north, you probably so a multitude of storms, definitely some of those making impact with Florida, which is causing issues as well. Insurance fraud in Florida is probably one of the main factors right now that's driving the cost of insurance.
So you mentioned insurance fraud, and you mentioned the insurance that the insurance companies buy has gone up 30%, and that's obviously going to be passed on to the consumer. What are you seeing that a year ago rates on a 5-10-year-old home were a year ago, and what are they today, so we can try to compare apples to apples?
Definitely, I've definitely seen on relatively newer homes, 10 years, 10 to 15 years old, seeing anywhere from $300 to $500 more annually on those policies for apples to apples coverage from a year ago. Again, with properties and obviously in your market, every property is a little bit different. So a lot of different factors go into it: roof shape and size of the home, coverages, whether they've had updates or not. All of that's going to play into an effect, which is ultimately why I would recommend to your clients, the sooner that you can get in contact with somebody in the insurance industry to at least give them the basics of what you're looking at, so that this doesn't become an afterthought that you find your forever home and then realize that either we can't get insurance for it, or you realize that the insurance is now 5 times greater than what you anticipated. So that information, getting in touch with an insurance provider early on to let them know what you're looking at, may help you make your decision a little bit easier at that point. Insurance is not impossible to obtain really for any property, but there are different companies with certain aspects of that house that you're purchasing.
So talking about obtaining homeowners insurance, this video series, this video that we're doing today is people kind of moving to Florida in 2021, what they need to know. What is it that people need to know this upcoming year on what they need to do to obtain homeowners insurance? Or maybe you can kind of look into your perfect crystal ball, and if you think insurance premiums are going to continue to increase or level off, what is it that future buyers need to know as they prepare to move here to Florida?
Sure. Well, I would say first thing, I don't want to scare anybody from coming down here. So, ultimately you can still come down, we can still get insurance, but obviously you need to be a little bit more due diligent in what you're doing in the home buying process. The biggest thing, again, is get in touch with an insurance provider early on with what you're looking at. We normally will let clients know, what type of inspections are going to be needed. Roof updates are going to be a huge factor for 2021. Companies are not all, but the majority of companies have gone to a 10-year limit on a 3-tab shingle roof. So, homes that you are considered early to mid 2000s, those roofs with shingles, potentially companies may not. So again, roof updates are going to be a big factor for 2021. Ultimately, I think rates will eventually level out. I don't think it's going to happen next year, but I would say probably in the next 18 to 24 months, we should see.
Nino, go ahead and reiterate what you were just saying. The call was breaking up on rates leveling out over the next 18 or so months.
Yeah, I would say 18 to 24 months. We hopefully the insurance market will get grasp on what's been going on, and I would hope at that point things would tend to lighten up a bit as far as underwriting restrictions go. Okay. And hopefully with rates being more consistent. Like I said, I do think rates are going to continue to go up over the next year, because I've already heard from some of the carriers that they're already filed a second rate that came on what we've been talking about, this initial rate, we could see some of those companies already filing.
Right. So kind of in a nutshell, obviously the insurance carriers, their insurance bill has gone up 30%. And one of the main factors to really consider in 2021 is going to be the age of the roof of a property. Like you were just saying, the call was breaking up a little bit, but if you have a property with a shingle roof, it's a 10-year-old or older roof, that could be a little bit of a hiccup, where in years past, a shingle roof, you'd be fine up till 18, 20 years as long as a inspector was gonna go ahead and give you 5 years of useful life. So that's really kind of a really important factor to keep in mind if you're not going the new construction route, but if you're going for the resale route, is looking at the age of roof. Moving forward. Well, thank you so much for joining the show today, Nino. We really appreciate it. I'm going to go ahead and I am going to put all of Nino's contact information at the bottom of this video and at the bottom of the podcast if you're listening on Apple Podcast. So you can reach out to Nino directly if you have any questions or concerns, or you just want to pick his brain in regards to obtaining homeowners insurance as you begin to relocate down here to Florida. Nino, thank you so much for joining us today.
Me, Matt, appreciate it.
So next I want to jump into mortgages and what we can anticipate, as you look to move to Florida in the year of 2021. So I've asked one of my friends, she's a local lender here, her name's Paula, to join the show today. Paula, jump on in here, tell us kind of who you work for and how long you've been in the industry.
Matt, thanks for having me. I work for Union Home Mortgage, and we have been around since the 70s, late 70s, I believe. We fund our own mortgages with our own funds, and we have control over the process. That's very important to work with a lender that has control over the process throughout. And I've been a local lender for 18 years, so long time. And
That's
prior to that, I worked for brokerage firms, so long time in finance.
Yes, that is fantastic. So I've got a list of questions right here that I'm going to go straight on down. So kind of starting off, the elephant in the room was COVID for the year of 2020. So can you kind of talk to us about what was going on with the loan process at the beginning of 2020? And then what has happened towards the end of 2020 in regards to mortgages?
Sure. So the beginning of 2020 was obviously, probably the end of the first quarter is when COVID started really being realized that this is not going away. And all of a sudden the markets this is a lot of uncertainty, and they didn't like that. So we saw a real pullback in what's called non-conforming loans in the jumbo higher end category. There was very few loans that were available for higher dollar amounts, except for some of the banks had basically over the 550 price point. We're talking about loan wise, not purchase price, but 550 and above loan amount. That has really come back, and it's come back strong, very strong. So that is something that's fabulous. I priced a jumbo loan this morning. It was at 2.75, give or take, which we haven't seen those kind of rates in the jumbo market in my 18 years of lending. So that was pleasantly surprising. It really surprised me pricing that out this morning, but that's great. So that's been a huge change. The jumbo market is back. The other thing that has been positive is obviously interest rates are super low. You can get a 30-year fixed rate for under 3%. That's phenomenal without paying a lot of points to buy the interest rate down. So there's a lot of refinancing going on. A lot of people are moving up their time frame to purchase simply because they want to take advantage of those low interest rates.
Yeah, no, that makes all the sense in the world. I know we've seen interest rates have been low for a while, and then COVID, they kind of just when you didn't think they could go any lower, they went a little bit lower. But let's talk a little bit about COVID and what happened. There was obviously hundreds of thousands of people that they lost jobs, and they no longer they didn't have the income to pay their mortgages, so they stopped paying mortgages. And then we didn't want to go into a lending crisis or mortgage crisis, so they had forbearance kind of came back in. Can you explain to my listeners what is forbearance? And let's say somebody was in forbearance and now they want to move to Florida. Can they still qualify to purchase a home?
question. So forbearance, if you think about it, is like taking a timeout on your mortgage. You're pausing your mortgage payments. I've been pleasantly surprised, because whenever that happens, we start talking in the industry and we're like, oh my goodness, how is this going to impact your credit rating? Are we going to see errors on credit reports? So for us, that was a little unnerving, wondering what we're going to be seeing. Fortunately, I've pulled plenty of people's credits since this has started, and I've yet to see an error on a credit report. So that's really great. They seem to be reporting that properly. And the other positive factor is, as long as you have come out of forbearance and now you've shown your due diligence to repay for 3 months, that's what they want to see, is 3 months on-time payments, then absolutely you can purchase. And I actually had a situation last month where someone sold their home while being in forbearance, and I had to question that, because now they're not going to have to be able to prove that, they're not going to have the availability to prove the 3 on-time payments. That wasn't a problem. The sale of the home took care of the forbearance, and we issued a new loan. They closed last week. So forbearance has not been a hindrance, which is fantastic. And as long as you're out of it, we've got refinances going on. Obviously the refinances, I'm waiting for one person to make that last third payment, and we're going to close them. So it's been good.
That is fantastic news. I know when forbearance came out, that was a big thing of, how is that going to affect purchasing power moving forward in the future? So let's talk about somebody who might be going through a lifestyle change, right? They might be semi-retired, or they just retired, but they're not ready to start collecting on all of their Social Security. So they were making a high income, but now that income has dropped off drastically, but they have several different assets, but again, they don't have a high income. How can they best position themselves, and can they still purchase a home here in Florida?
Huge demographic that is looking to buy in Florida right now, especially in the second home category. Or someone that, just like you said, is making a lifestyle change. They're planning on moving here in 5 years, or they're planning on moving here now. Basically, we can be very creative with income and still offer the same fantastic interest rate, putting you in the Fannie Mae, Freddie Mac lending category. If you have an IRA, for example, let's say you're over 59 and a half and you want to purchase a home for $400,000 with 20% down, that's going to create a payment for around $1,300 principal and interest. Add taxes and insurance, and you're looking at a payment of about $1,800. So assuming you don't have a lot of debt, just for simplicity, you would need about $4,000 a month in income to make that work. So if you have an IRA, for example, that is a value of about $144,000, we could create income using that IRA without having to use an existing job, without having to use Social Security, because if you're in that in-between period, or a pension that hasn't started, we can leverage assets. We can even do that prior to 59 and a half using an IRS rule 72T that goes into substantial setup periodic payment distributions. I just messed up the acronym, but anyway, we can do that. Also, if you have a trust, for example, and you're under the age of 59 and a half, that is something that we are able to do. I did it last month for someone, and they had some assets in a trust, and we created income that way too. So there are alternative ways to get financing if you don't have a W-2 type of income.
Yeah, no, I think that's really important, because particularly in our market, not only Sarasota, but in Florida, COVID has caused a lot of people to want to move here, and we obviously have lots of new construction options and resales, and we do still have some low inventory, but financing, if you don't have cash and now your income's dropped off, that's super important to know, how creative that you can get. And the last question that I have for you today is, what do you expect to see in 2021 that was different than what we saw in 2020 in regards to, maybe some interest rates or restrictions that they could be imposing?
Yeah, it really depends on who you ask, and it depends on what you read, because I'm hearing it's still going to be a phenomenal year for interest rates, which I believe, because even if we do have a major economic recovery coming out of COVID and the economy starts going very robust again, we're still going to be low. Even if we have a little bit of a hike, we're still so low. We would have to have some drastic changes, and I just don't see that happening because the Fed obviously wants to see rates increase gradually, and so that it doesn't obviously hurt people from trying to purchase and things like that. So yeah, I think it's going to be low. I think it'll be a great opportunity, and we've got new administration, so whether
Great.
that's a pro or con, we won't even go there.
That's fantastic. Thank you again so much for joining us today and kind of bringing some insight in light of people looking to move here in 2021 and some of the things that they need to know. I'm going to go ahead and I'm going to put all of Paula's contact information in the link below in the description below, and if you're on the podcast, it will be in the show notes below. But again, thank you so much for joining us, Paula. And if any of you listeners have any questions or want to just start the conversation, that is one of the things I love so much about Paula, is she is so great at just starting that conversation and taking the time to really explain to you what your options are, regardless of if right now is the best time to purchase or maybe a year from now. So thank you again, Paula, for all that you've done for clients that I've passed over to you and for kind of bringing some insight today.
Thank you, Matt. Appreciate it. Have a great day.
So obviously there are a lot of little details to think about and consider when you are moving here to Florida, especially for this next year and coming out of COVID. And every situation is going to be a little bit different. So if you have any specific questions, feel free to reach out to me directly. Give me a phone call on my cell phone, shoot me a text message, or drop me an email, and I would love to help you and your family best position yourself as you look to relocate here to Florida. Thanks so much for joining us, and we'll see you next week.